Good morning, guys. Welcome to this Thursday, July 3rd. Last day, half a day on the equities. A lot of news coming out today. We are on congressional watch as well until for the final vote on this bill. It says final holdup is this their speaker, which is now filibustering or talking, doing like a marathon talk to delay. It's like pathetic, but it's what it is. So it's most likely going to happen. Looks like they resolved everything overnight, and it's going to we may have that bill down by July 4th. Pretty good. I think we're going to see a nice reaction in the market if that happens. If that happens, it will happen. So starting off the day, taking a look at the financial news, and we got a ton of it. First of all, employment situation. Employment report coming out at 8:30. International trade, jobless claims, all at 8:30. Remember, the ADP report was shitty and on Wednesday, and they came out like 30,000 less than what? It's a negative 30,000, I think it was. Employment situation is going to be key in this report. If it comes out as a bad number, it's going to be a lot of pressure on Powell to do something on the interest rate side. But employment situation coming out 8:30, international trade jobless claims. 9:45 we get PMI composite. 10 o'clock we get factory orders and ISM services. All right, so that's what we got in front of us. After that, I would expect the market to slow down pretty freaking quick. So most likely after that London close, we're probably going to see this market just absolutely die off and just drift sideways. Now do have a half a day on tomorrow as well. It's not much going to happen on that day, I think. If anything, we may see it's like a slow grind to the upside. It's kind of would be my expectation if the bill passes and gets signed into law. But right now we're looking at the market which is expecting it, and they're making new highs, and we just stay on the long side. So we are out there grinding to the upside. So market was expecting or has been pricing a lot of it to happen. I'm thinking we will see a little bit of a bump even after it gets signed, because that finality is probably going to be a positive for the market. So starting off from the long side, looking to buy weakness at this point against the 6270s, 6260s, 55s, 45s down to that 35 level. Now we have a pretty good ledge right now at the 25 to the 20 to 25 right here. That would be the one I would be watching for a potential retracement trade. But it looks to me like we're back in stage one on the ES. So yesterday they extended, and we had this holding day yesterday. They extended very late, but they did extend, and the overnight has been extending. So we're back in stage one. This little holding day turned out to be just that. It didn't go anywhere. And well, let's see how far they're going to take it. So staying on the long side of this is a light volume trading day still. I don't think we're going to see any big selling happening at this point. Most likely at the maybe the week after July 4th or into July, maybe. But I think what we may see there is just the trade deal starts happening. If they start seeing these trade deals starts coming out, that's going to be another tailwind for the market. So we may find ourselves in that traditional July-August weakness may get delayed or not happen at all. So starting off on the long side of the market, I'm going to buy weakness, not going to be very aggressive on the short side at all. So I'm going to buy against that 6270s, the 6260s, 55s, 45s, down to the 35s. Now they take out the 35s, the low of yesterday's session. We are down to that lower level here, the 25s. So you can see if that level comes out, these two support areas, the 35 and the 25, take off the long bias, go back range bound, look for potential retracement. If both of those comes out, I think there's something going on at that point. Now, I don't think we'll see a rumor fact kind of dynamic. They passed the bill we see selling. It's just too close to a holiday and too much good news for the market to do that. And most players just going to bug out and go home. And then you're probably going to see a slow drift to the upside throughout the July 4th half day. So anyway, so that's how we get started. So and just for housekeeping purposes, tomorrow I'm not going to open the room. You'll see guys back on Monday after that. But today we'll be going, and Just remember the equities close early, close at 1 o'clock Eastern. So just be aware of that. Don't get caught in trying to trade it in the afternoon. Looking at the bonds and the NASDAQ bond market, that's kind of holding in the same range, hasn't quite moved anything, so it's pretty dead. It's kind of sideways, as you can see, it's kind of flopping around sideways. Not much to say about the bond market at all. So starting off range bound, just fade the edges back to the mean. I don't think we're going to see a big reaction there at all. Well, we might, depending on the employment situation, and a caveat, depending on the employment situation, we may see some action going. If that comes out as a shitty number, we may see a big reaction on the bond market. But right now we are sideways, and I would say look to sell strength 115.10, 115 18 to 20. Look to buy weakness 15s, 14 26 27, 14 22s for rotations back up. Pretty tight range. But it all hinges on the employment situation, and if that generates a big reaction, if it does, we may see a directional move. But initially, if it's a volatile but not directional move on the employment situation, just go back to the analysis, which is flat out range bound trading on the bonds. So sell strength 15.10, 15 18 to 20. Look to buy weakness 115s, 50 14 26 27s. 14, 20, 21s for rotations back up again. And outside of those, we may have a directional move going. On the NASDAQ, also making, not quite making new highs. The NASDAQ is really in stage 3, and they moved a lot. They backed off pretty hard, and they have been stage 2. They cut off the selling, looks like, in the first day here. That was after that first high, looked at the cut off the selling here at the 590s. They're back up again in stage 3, and let's see if where they're gonna go from here. But definitely, I would say range band. I would stay with the bias to the upside given the yesterday's trading and the potential for some good news coming out. Caveat: all the employment situation is always there. So I mean, the same thing for the ES right now. If the reaction is volatile but not directional, I would just stay on the long side of this and see if they can retest these highs, potentially take it higher. NASDAQ, we have a better shot for potential short setups against that 890 and the 920 since we are back in stage 3 on that profile. The ES is in stage 1 still. That's still extending. So I would say that the NASDAQ could very well be as drawn with the ES to the upside. So we'll see how the news comes out and shakes out. But if that news is directional, either up or down, we may get the directional move. Not sure we're going to see a big sell-off as a result of it. We may get the directional move either up or down depending on that employment situation. So, but the key thing to watch there is really directional, but not volatile, but not directional. Fall back on the analysis. On the NASDAQ, we are range bound. On the ES, we're still leaning long in stage 1. And I would say that the NASDAQ could come back into that long bias pretty quick if they take out resistance here and starts trading higher. But since the NASDAQ is in stage 3, I would be a little bit more aggressive on these shorts at the 890 and 930. But I would let the news pass first. So let the news digest a little bit, and then maybe put on some trades. You don't have a lot of time though, so unless you want to trade the craziness, then you may run out of time. So remember, equities closes at 1 today, and 1:15 exactly. But I would say 1 o'clock, stop trading it. And so looking for shorts against that 890 and the 920s. Looking to buy against 820s, 770s, 730s, 670s, 640s down to that 590s. There could be a few buying opportunities on the way down if the reaction is negative. Unless they take out that 590s, I'm not going to change my bias from range bound to short. There could be short trades in there on the way down, obviously, but it's the overall bias. I would still be looking to buy against these support areas. So be mindful that you don't sell into them, right? The most common mistake, you get stuck staring on the F4 screen, and you forget that the market is running right into support area, and you get short, and you find yourself what the hell happened? The market just turned on me. Well, that's because you ran into a support area. So, uh, so starting off range bound on the Nasdaq, I would probably maybe give it a slight bias to the upside. Still looking for shorts against this 890s and the 930s for rotations back down, and a fair amount of buying opportunities on the way down if the reaction is negative. So we'll see. Now, anyone can guess how they're going to react to the employment season. If it's a shitty number and the pressure is going to be on to lower rates, the reaction may be positive, or it may be as negative because people think the labor market is falling apart. So the reaction to it could go either which way. But I'm going to be looking for volatility versus, but not directional, versus more of a directional move. If you see a directional move, then just trade with that move. All right, so that's the ES and the Nasdaq starting off range bound. Nasdaq with a slight bias to the upside. The ES is still on the long side. Finally, oil and gold. Both of those guys are. Gold is just range bound. I mean, that's not going anywhere. That could also be a nice reaction on this number. So they're up here. They have not been able to take out that the 65 and the 70s. They've been up trying in the overnight, not been able to probe a little bit higher to 76s, but so far they're heading back down again. Doesn't mean that they are going to stay down. The gold is going to react to that employment situation pretty violent as well. So that could be big moves happening on gold. But I would start off range bound right now. Look to sell strength 64, 65s up to the 70s for rotations back down. Looking to buy against support 52s, 46s down to the 39s. And start trading below 39s, maybe in the 32s here. These two support areas, I would be starting to think that they may head right back down again. So that's our range. So the lower end of that range is going to be 32s up to that 70 level, 72 level. Again, the key thing, employment situation results in a volatile but not directional move. You just fall back on the range-bound trading. If it's directional, look to trade it in that direction, at least to get started. And if they can't extend, then you want to be on the other side of that trade, because then you may see it reverse pretty hard. And then oil, never up here to the 67.50s. Nice move up yesterday, but I'm not quite sure. It felt pretty counterintuitive. And now they're back down, reverse retesting 66.50s in the overnight, and now they're right back up again. So I'm going to stay on the long side of oil, waiting for them to get back down below that 66.40 to 50s right now. And if they do that, we're back in that lower range again. So we'll see if this is just a probe to the upside, or if we're going to get some extension to the upside. It's hard to say. We're trying to what's driving that right now. No really geopolitical issue going on, I think, which is can drive up oil prices. But there could be something brewing somewhere. So I'm not sure why this popped like that. Haven't heard anything about it, but there's probably a reason for it. But I'm going to stay on the long side until I see them trade back down below the 66s, and then we're back range bound again. So initially looking to buy against that 66.80 to 90, or sorry, 66.80, and then 66.50s for rotations back up. And not going to be super aggressive on the short. The only one I would consider was 67.50 if they hold that area of resistance. But starting off on the long side of oil, so trade oil from the long side, and the gold as a range bound market at this point to get started at least. And then once we get past news, we can figure out what direction the market is trying to go. So back to the ES, and it's still at the highs. Still a pop rally up here, but they're still trading at the highs. And Nasdaq is close to the upper levels as well in their range. So a key thing here is really as the news trickles in, and we have news at 8:30, the big news, employment situation, 9:45 and 10. After we have passed the news, we have a few hours of trading in front of us where we potentially can get something done. But expect pretty volatile markets, I would think. I think the best case could be the employment situation coming in a way where the market just has a dud reaction, no big reaction, volatile, no directional move, just a little bit of volatility and then goes back. That's going to be the ideal setup, but I don't think we're going to get. Well, I'm not going to say I don't think we're going to get it, but I would hope we get more of a report like that, but we'll see how the market reacts and how it comes out. All right. So interesting day, busy day, and then expect the market to die down. I'll do the updates today, and then we'll wrap it at 3:30. But right now, we'll wrap it for this update. So good trading, and I'll see you back at. I'll do updates all day long. So I mean, I'll do the 11:30, 1:30, and 3:30 updates, and then we'll wrap it. So it's most of the market, everything is open until the as a regular close, except for the equity. So it's going to be one of those kind of odd days, but you never know. It's going to be some interesting things happening in the afternoon. So, alrighty, guys, we'll wrap it there. Good trading. Watch out. It's for the employment situation. It could be an interesting reaction. So good trading, guys. I'll see you back at 11:30 for the next update. Later.